everyone, I'm Michael Reinking, coming to you straight from the floor of the New York Stock Exchange with your weekly brief. As a reminder, the NYSE does not recommend any investments or investment strategies. So the situation in Ukraine continues to drive volatility across financial markets. Over the weekend, we saw military operations escalate and the West united imposing harsh economic sanctions against Russia. Now, despite all the uncertainty and the volatility, U.S. equity markets have remained quite resilient. We bottomed essentially at the open last Thursday as the invasion started, and we've since seen the S&P 500 rally about 7% coming into today. Now, we've seen, we've become accustomed to the kind of 2% intraday ranges within the S&P, but we're only modestly lower for the week. But that volatility pales in comparison to what we're seeing across other asset classes. Given Russia's importance within the commodities complex, we've seen metals, ag-related, and energy-related commodities all moving sharply higher. This week alone, wheat and oil prices are both up over 20%. Now, this morning, ICE Brent traded up to about $120 a barrel before reversing back to about $113 following reports that an Iranian nuclear deal could be announced in the coming days, which would bring some Iranian oil supply back to the market. Now, clearly with commodity prices moving higher, that's going to add to the current inflationary pressures, which brings us to the other primary topic this week, which was Chair Powell's testimony before Congress. Now, yesterday, he essentially rubber-stamped a 25 basis point rate increase at the March meeting, but he did open the door to a 50 basis point rate increase, should the data warrant going forward. In terms of the balance sheet reduction, he suggested this would happen via maturities as opposed to asset sales out of the gate, and this would potentially play out over a 3-year time horizon. Now, yesterday, his comments, removed some uncertainty from the markets, and we saw equity markets, rally sharply. What I think this also does is de-emphasize some of the near-term economic data. This morning, we largely shrugged off a weak ISM services report, and then tomorrow we have the BLS employment report, where I think the focus will primarily be on wages and the participation rate. Now, the Fed will be in a media blackout window next week. We do have an ECB policy decision on Thursday, and then inflation updates from China on Tuesday, and US CPI on Thursday. Clearly, the primary focus for markets and the world will remain on the Ukraine. Well, that's going to do it for this week. Thank you for joining me. I'm Michael Reinking. It's been your weekly brief.